Today on the Blockchain Report, Bitcoin's back at 116K after $500 million in liquidations. Congrats, degens. You just played yourselves. Michael Saylor just bought another $51 million in sats because apparently orange coin addiction isn't covered by insurance. And US AI experts tour China and come back saying, yeah, we're cooked. Uh-oh, turns out our power grid runs on duct tape while China is basically living in the future. All that and more right now on today's show. Let's go. Good morning, my Bitcoin baddies, and welcome back to a new week of the Blockchain Report. I'm Hank Hudson reporting to you live from San Francisco, where the coffee is $7, the rent is $7,000, and sidewalks come with free bonus levels that literally nobody asked for. And yes, it is Monday, the day we all pretend to start fresh, even though our fridge is still full of regret, takeout containers, and whatever's left after your weekend bankroll is all spent up. Now, quick programming note in case you haven't noticed, on Mondays now only, we're coming to you live at 10 a.m. Pacific. The rest of the week, we're back to our usual ungodly slot of 8 a.m. PST. So if you're late today, congratulations, you're accidentally on time. Now, before we dive into today's buffet of over-leveraged dreams, boomer senators cosplaying as crypto experts and billionaires tweeting like they're still in high school, let's start with a little financial theater. Pretend you're bullish on literally anything in your life and smash that like button like it just dumped your bags at the top. And while you're at it, follow RoxomTV and yours truly at Hank at RoxomTV everywhere that you go to doom scroll. All right, time to see who survived the weekend or didn't in this morning's market rundown. Let's do it. Oh boy, let's see how the crypto gods are treating us today. Not great. They don't love what we're doing right now. Here's how things are looking. Right now, Bitcoin has creeped back up to 116K. We even saw it touch as low as the 114s for a half a second there. It shot back up to 115. It looks like we're getting back on track though. We got the momentum, and we're gonna have Stephen Orr, Mr. Big Beat himself, talking to us about the markets in just a bit and gonna tell us where he thinks things might go, so stay tuned for that. Ethereum chilling at around $4,300 a coin this morning. XRP is down about 2.5% in the last 24, currently sitting just above $3 a pop. Cardano down nearly 5.5%, currently just beneath 91 cents a coin. And Dogecoin doing what it does best, nothing, sitting at around 22 cents a pop. Let's see if the stonk market is treating us any better this morning, and the answer is kind of. It's kind of treating us better, so that's a start. Right now, the Dow Jones is sitting at just beneath 45,000. The NASDAQ Composite down about $37.50 this morning. Not a lot of action going on there. The S&P, more of the same, down about $6. So not a lot of action happening in TradFi. MicroStrategy / strategy, they are currently sitting at $3.65 a share. Tesla is up a percentage point this morning. Coinbase is up nearly $5.50 a share. Nvidia sitting pretty at $181 a pop. And last but not least, we got GameStop sitting just beneath $23 a share. All right, we got a lot in store for you today, but we're going to take a quick break first. But when we're back, we're going to be doing our bull run with this morning's top stories, so stay tuned. All of that and much, much more on today's show. We'll see you right after this. All right, welcome back to this morning's bull run. This is the part of the show where we go over the top stories of the day so that you can spend your morning doing whatever the hell else you want. We do the heavy lifting for you. Let's jump right into it. Well, first up, as the new old adage that I just made up this very second goes, Bitcoin giveth and Bitcoin taketh away. After smashing a new all-time high last week at 124K, its fourth one this year for those of you keeping track at home, Bitcoin has cooled off to around 116K as of right now. At one point, it even dipped as low as $114,706, triggering more than $500 million in forced liquidations. I don't like it either, guys. Don't like it. But that is what happens when over 131,000 traders lever up and get margin called into oblivion. In just 24 hours, about $123 million worth of Bitcoin longs were liquidated, along with $178 million worth of Ether longs. Now, Ethereum itself slipped 4%, down to about 4,280 after nearly touching its own all-time high of 4,800 just last week. The spark to all this? Higher than expected inflation data for July, raising some questions about whether the Fed will actually cut rates this coming September. And because crypto traders are allergic to bad macro data, they, of course, panic sold. Adding to the drama, Treasury Secretary Scott Bessent clarified that Trump's so-called strategic Bitcoin reserve will only come from coins forfeited to the federal government, meaning no trillion-dollar Bitcoin shopping sprees just yet. Crypto stocks also took a hit. Bitmine Immersion dropped 6%, Sharplink Gaming fell 3%, and Bullish, which literally went public last week, slipped 3% in pre-market trading. Now, despite the pullback, ETFs are still stacking sats. Bitcoin ETF saw $547 million of inflows for the week, while Ether funds raked in $2.9 billion, their 14th straight week of inflows. So while traders cry liquidation, the institutions quietly keep buying. Now, history says that August is usually a weak month anyway. September's Fed meeting is where the real fireworks will be. Until then, think of this dip as a, strategic cool down, or if you're over leveraged, think of it as a very, very expensive lesson. And Michael Saylor, well, he's back at it again, and surprise, surprise, he is still very much allergic to fiat. Strategy has now scooped up another 430 Bitcoin, spending about $51.5 million at an average cost of $119,666 a pop. Ugh, eerie number. Now that brings their hoard to a very casual 629,376 BTC, valued at about $17 billion at today's prices. And for anyone keeping score, they've invested $46.2 billion in total, which means they're sitting on more than $26 billion in paper gains. Not bad for a company that used to be called MicroStrategy and sold business software. Now they're basically a publicly traded Bitcoin hedge fund in disguise. Saylor even teased the move over the weekend with an X post reading, "Insufficient orange." There it is. Or in other words, Daddy needed more sats. And that's exactly what he did, because he wasn't kidding. This most recent purchase pushed Strategy even closer to controlling 3% of Bitcoin's total 21 million supply. They're funding the spree with an alphabet soup of preferred stock offerings. STRK, STRF, STRD, STRC, all paying fat coupons so they can swap Wall Street's cash for orange coin. It's part of their 42-42 plan, targeting $84 billion in equity and convertibles through 2027, because apparently $21 billion wasn't enough the first time around. The results? Well, record net income of $10 billion last quarter, thanks almost entirely to Bitcoin's mark-to-market accounting. Meanwhile, their actual stock price has dipped more than 13% over the past month. Investors seem to think that holding nearly 630,000 Bitcoin is risky, which is hilarious because let's be real, fam. Fiat companies with zero Bitcoin are the risky ones. Now, Strategy is now the king of corporate Bitcoin treasuries, dwarfing everyone from miners like Mara and Riot to copycats like Trump Media and Japan's Metaplanet. And while Wall Street analysts argue about the company's premium to its net asset value, Saylor, he just keeps on buying. Because in the end, there's really no such thing as insufficient orange. You know what I mean? That's right. And Japan's Metaplanet, we just talked about them a second ago, well, they're still trying to cosplay as Michael Saylor. The Tokyo-listed firm just bought another 775 Bitcoin for around $93 million at an average cost of $120K each. That pushes their total stash to 18,888 BTC, worth about $1.94 billion at an average purchase price of $102,600. Now, President Simon Garevich announced the move with the understated line, 18,800 in BTC, onward and upward. They're always cute with their numbered buys, that company. Now, this all comes as Bitcoin itself slipped 2% to around $115,000, $116,000, which is when smart buyers tend to start stepping in. Metaplanet, once a struggling budget hotel chain called Red Planet Japan, has now reinvented itself as a full-blown Bitcoin treasury company. Their Q2 earnings show the pivot is working. Revenue jumped 41% quarter over quarter, swinging them from $34 million in losses to a $75 million profit. And yet their stock fell nearly 9% last week because traditional investors still panic when they see Bitcoin on a balance sheet, while people who actually get it know it's the only balance sheet that really matters. Now, the company has even announced plans for a $3.7 billion stock raise to buy more Bitcoin. Analysts point out the risks: volatility, equity, dilution, cash crunches if BTC drops hard. But those same risks are what make Metaplanet a pioneer. This is the corporate playbook: swap fiat, buy Bitcoin, survive volatility, and watch fiat melt away while your balance sheet hardens. It's not unique to Japan, but Asia's regulatory patchwork makes it harder for other companies to follow suit. So Metaplanet stands out, both as a cautionary tale if Bitcoin collapses and as a hero if Bitcoin moons. Given history, I think we know how this story is going to end. Onward and upward, indeed, boy! My friends. Yeah, thanks, Flav. And in other news, the United States might have stumbled onto the most Bitcoin thing ever, buying sats with tariff money. Author Adam Livingston, who literally wrote The Bitcoin Age and The Great Harvest, says the U.S. should funnel its monthly tariff surpluses into a Bitcoin strategic reserve. And yes, there actually is a surplus. So far this fiscal year, the government has collected $135.7 billion in customs duties. That's double last year's pace, which means there's about $70 billion just floating around, unallocated, not tied to Medicare, debt service, or any other sacred cow. Livingston's pitch is actually pretty simple. Stop letting that money sit idle and start stacking BTC with it. Put it into cold storage. Don't stake it. Don't loan it out. Don't try to get cute. Just hodl strong, baby. Now, the beauty is that it checks Trump's box for budget-neutral pathways. His executive order bars the government from dipping into new funds for Bitcoin, meaning any fresh buys have to come from existing surpluses. Treasury Secretary Scott Bessent, however, can't seem to keep his story straight. Last Thursday, he told Fox Business flat out, "We're not going to be buying that." Then, a few hours later, he backpedaled, saying the government is exploring budget-neutral pathways.
You are fake news.
In other words, yay, we're still hoping for loopholes here. Other budget-neutral ideas have been floated. One is revaluing Treasury gold, which is still marked at a laughable $42.22 per ounce instead of, the real $3,335 spot price. Another is dumping barrels from the Strategic Petroleum Reserve and swapping oil for Bitcoin. But tariffs may be the cleanest option. They're already collected, they're unallocated, and they don't require Congress to raid the Social Security Trust Fund. So while Americans argue about whether tariffs are a tax on consumers, Bitcoiners are sitting here thinking, if this tariff surplus to Bitcoin idea happens, it might be the first time in history tariffs actually did something useful. And Cathie Wood, she's back at it again on her soapbox, this time predicting that Bitcoin will 15x by 2030 and hit nearly 900K. Yeah, just breathe that in for a second. $900,000 per Bitcoin by 2030. That's 4.5 years away, and I love it. Now that means if you're still stacking sats, congratulations, you might be richer than your boss by the end of the decade.
Yeah,
now,
boy!
he is really excited today, and so am I. So what is Kathy's logic here? Well, institutions can't resist Bitcoin anymore. All it takes is a tiny sliver of their $1 trillion portfolios to send demand into absolute overdrive. Meanwhile, supply stays locked in at 21 million coins. Translation: Wall Street finally figured out there's a limited menu and everyone's ordering the same entree. Wood says that Bitcoin is the new digital gold, but shinier, scarcer, and way easier to carry through airport security. She's also doubling down on her favorite talking point, Bitcoin as an inflation hedge. Forget about gold bars, just hodl some magic internet money and you can call it a day. Naturally, the forecast set off a wave of bullish cheerleading across crypto Twitter because nothing says healthy market like price targets that sound like Powerball jackpots. Of course, the skeptics are out too, pointing out that Bitcoin is still volatile, regulation could kill the vibe, and Kathy, well, she's been wrong before. But hey, she also called Tesla before it was cool, so maybe don't bet against her entirely. At the end of the day, whether Bitcoin's at 900K or still grinding sideways, one thing's very clear. Traditional finance can't ignore it anymore, and that's half the battle. The other half, surviving the roller coaster without selling your coins at the bottom. And Galaxy Digital CEO Mike Novogratz, he's here and he's ready to kill the vibe. While some Bitcoiners are salivating over predictions of $1 million Bitcoin by 2026, Novogratz says if that happens, it's not cause for celebration. It means the U.S. economy is in some serious trouble. People cheerleading for $1 million Bitcoin next year. I was like, guys, that only happens if we're in a shitty place domestically, he told Natalie Brunell on the Coin Stories podcast. He'd rather have a lower Bitcoin price in a stable United States than a moonshot caused by civil unrest and the collapsing dollar. Novogratz pointed out that when national currencies fall apart, citizens don't win, they just scramble into whatever safe haven they can find. Bitcoin becomes that digital life raft. Other analysts have echoed the same sentiment. Scott Melker, the wolf of all streets, said back in 2023, the faster it happens, the worse the world is. Of course, not everyone agrees. Arthur Hayes has been calling for 750K to 1 million Bitcoin by 2026, and Samson Mao says we could hit 1 million maybe this year, maybe next. Novogratz also took a swipe at Treasury Secretary Scott Bessent, saying he's failing to rein in the debt to GDP ratio under President Donald Trump. The deficit is going to be higher, not lower, he warned. He's also nervous about the Bitcoin treasury frenzy, saying Galaxy gets 5 calls a week from new companies wanting to put their BTC on their own balance sheets. So when cab drivers start asking about Bitcoin treasury strategies, that's when you know it's bubble territory. Still, Novogratz is pro-Bitcoin. He just wants it to rise in a healthier way, not as a byproduct of a burning economy. So, yeah, $1 million Bitcoin, it sure sounds sexy. Boy. Yes, man, he is on it today. But if it happens overnight, don't pop champagne. Start stocking some canned goods. All right, we're taking a break. When we're back, we got more blockchain report in just a bit. We're going to be joined by Mr. Big Beat himself, Stephen Orr, to make sense of these markets. So stay tuned. More blockchain report coming back to you right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to the show. We're at that fun time of the day where we're at our market check with Mr. Big Beat himself, Stephen Orr, joining us. Stephen, how are you this morning? Happy Monday.
Hey, Hank. I think every time you look over the weekend and you see what the whales are doing and you look back and you go, I don't care, right? When you look at the market in general, and I think there's just so much hot noise that just goes around the world, and we have to kind of filter that out sometimes. I want to see what they're actually doing and not what they're saying. As my grandfather says, do as they do and not what they say, right? A lot of times when you're looking at the market and you're hearing news coming out, what they're saying to us right now is that, hey, look, the market ran up a bit on the Bitcoin. Let's take some profits off. And they did that, right? And they've been doing it for a little bit. But the question mark that I need to be answered this week, and as you always know, Hank, my answer to everything is always clarity. When I get clarity on something, then I know a little bit better of what I'm thinking and what I'm going to do and how I position myself. And that position is being asked around the question of Jackson Hole this week. Why Jackson Hole? Well, it's the Fed symposium, right? This is the time we find out what it is that the Fed is actually thinking in a setting that's not quite blasé, like as in DC or New York, right? We get to see them in a nice little setting with the cold weather in the morning and hot in the afternoon, and they go on the CNBC and Bloomberg and the talk shows, and someday hopefully they go on RoxomTV and tell you what's going on. But this time they get to ask questions, right? In a way that's a little bit clearer setting. And hey, what are you really thinking, pal? What are you really thinking, Fed? In a way that I want to know where, yes, I see your press releases every other month. I see what you're thinking in your meetings. But what are you thinking outside of that meeting? What is your thought process around that? What is the data sets that you're looking at? And for me, that answer is going to be a lot closer. Now, we saw over the last few weeks, we saw one thing, right? We saw FOMO happen because they thought we were going to get a big cut and that's going to make everybody happy. And now all of a sudden we see inflation numbers come out, that clarity that we needed to see. We saw PPI numbers, CPI that has came in, inflation was hotter than expected, as most of us on Wall Street totally expected. It wasn't anything new. But what we wanted to see now is the Fed still on track for that cut? And the answer is yes, 25 basis points. Are they in cut for a jumbo? No. And will they? Probably not. Because if they do a cut in a jumbo like that, that's problems, right? The cracks are bigger than we think they are. If they have a jumbo or we call it intermeeting cut, that's also bigger problems. And that does not mean risk on. Risk on is when you see these 25 basis point cuts, 25 points, here, another one in October, and another one in November, December. That's when I like these things. Not fast and speedy. I want to see them nice, slow, and steady, and that's what we want to see. The second thing you want to see is whether or not how they're feeling about their jobs at the Fed. Powell knows he's out, but the people to replace him are all Trump people, right? So when you look at it from that perspective, will a bigger one come? Probably, yeah. But will they listen to Trump? Yes. Will there be a separation between the White House and the Fed? That's getting a little murkier, and so that bothers me. So when I look at that, Hank, the thing I just got to show you right now is I think everybody should look at one chart and one chart only when it comes to Bitcoin right now. And that's the dollar, or better known on Wall Street as the Dixie. So when we look at the Dixie, right now, I am seeing, you can see my charts up now, right now. You can see that we are pushing up a little bit to the upside. I'm going to pull up a dollar or a Dixie, pull up in a day chart. We have started to find a base right here. If you can look at this base here on the charts, you can see right around the 98 handle. About a month ago, you saw it pushing above the 100 handle, and that's where it kind of slipped and stopped. Why is the dollar that important, Steve? Bitcoin's based in Satoshi. It is. But a lot of investors are actually seeing whether or not how much appetite risk they have on from the US side, which has been the hottest. Why? Because of ETFs. Why? Because of derivatives. So we're seeing that now. We're basing again here at 98 and a quarter, 98.12. This handle here is a little bit, you can see right here. I think we're going to push back above 99. That's going to be pressure against Bitcoin. A lot of pressure on Bitcoin. We're going to see pressure on Bitcoin based on the Fed. If they say, oh, look at the inflation numbers. Oh, look at these numbers again, the jobs numbers. The cracks are here. That could cause a little bit of an issue. But for me, it's not. It's still all about Bitcoin and all about accumulation. So what is Michael Saylor doing? So I'm going to pull up a Bitcoin chart on that same daily chart, and you can see it's based again. A dip this morning. It's by the dip. It is still BTFD, if I can say that here live on the air. It is still the same, right? Why? Because we are going one direction. If you look at the daily chart, we're still going in the same direction. I'll pull up a little line. There it is. Right? There it is. And as we pull this line up, go ahead.
Oh, no, I was just going to say, so from your opinion and where you stand right now, you feel like this most recent crash from 124 to 115, all high 114s that we saw is just a normal pullback. We're seeing some profit taking and a little bit of uncertainty in the market as we await for more information about the Fed cuts and then the dollar. Is that accurate?
100%. This is, if you've been around the Bitcoin as long as we have, Hank, this is not even a crash. You call it a crash. I call this a blip. I call this a bump
Yeah.
on the road. It's not even that. It's nothing. You saw $300 million of liquidations over the last few days, over the weekend, right? But if you saw the pump going into ETFs, it was into the multiple of billions, hundreds and hundreds of billions of dollars going into the. So it wasn't them taking the money out or off the exchanges. It was just profit taking. And if you want an opportunity to get into the market, if you like it at 123, you're sure as hell going to like it at 114, right? And now we're at 116, almost 117. We're bouncing back very quickly. So if I pull up a 1 hour chart on it, there it is again. There's that buy in the dip mentality right there. We know where it's at. So we haven't stopped here buying. Nothing has stopped the train. We're still going higher. I pretty much think by the end of next month, we'll be making new highs again. Now, we know August and September are not normal months. We know that August is usually a month where there's a little bit of a pullback, a little bit of profit taking. We know that. We know we're going into the end of the doldrums of the summer. We're going into the fall where there's usually an issue. We know that. Markets usually pull back here as we realign, or as we call it on Wall Street, window dressing. And when we do this, we look for entries back into the market, right? But if you are a long-term investor, you're not doing that. Why? Because you're just causing yourself more an IRS headache yourself, right? You're going to have to pay tax on that. And so unless you, I guess, obviously live in Puerto Rico and a few other places, but the truth of the matter is most of us got to pay tax on this. So why take that off? I'm not seeing it. I'm seeing the basing. I'm seeing another buying opportunity. That you're seeing the MACD also. If you're a trader that looks at the charts, you're seeing the MACD. You're also seeing RSI turn around on so many different levels. So I like this dip here, and I'm very, very long now. I'm going again. I'm going strong again now.
Yeah, but with any dip, it makes me wonder, do you think that's going to shake out some of the weak hands in the market, or maybe even scare off some of the new investors into the space, even if there's, people that have been in the space for a while, they're like, hey, are seeing this as more of an opportunity? Do you think that has any short-term effect on these weak hands and potentially new investors?
I wouldn't know about weak hands because mine are diamonds. I keep diamond hands, Hank. No, listen, you're totally right. There are a lot of weak hands in this market. They don't know, oh, I didn't get in. You're all lucky because you all got in early. There's no such thing as luck in this game. The markets itself don't care about your feelings. It doesn't understand your feelings, doesn't know it's a mechanical machine. You buy, you sell. You put orders in. That's it. The machine itself is built on other people and other algorithms. You're literally facing yourself against institutions. You're literally facing against people like myself who has been in a long time. Why fight that? Just buy the dips. Don't go full boat, as I always say. And every time you do that, make sure that you're doing it in a way that doesn't hurt you. When these dips happen, if it's $100 or $1,000 or $1,000,000, it doesn't matter because we're going in one direction. But when you do see these pullbacks, don't get scared. Be happy. I love it when things happen like this. This gives me an opportunity. But at 124, Hank, I did it on your show, I took profit off. I said, okay, look, it's had a nice run. Let's take some profit off. But I didn't sell all of my Bitcoin. I sold 10%. I didn't take all of my Ethereum off. I sold 10%. Why? Because if there was a 10% pullback, I'm buying right back in. And guess what? I've stacked sats. That should make you happy. Continue to trade the markets. We're all traders. We're all investors. But when we do it methodically. Do it with no, and I say this all the time, with no emotion. You should have zero emotion. Get rid of that thing inside of you that says, oh, I got to be in, or I got to be out of the market. Oh my gosh, what's happening? I can't wait to look at what the next Twitter feed is happening and tell me what to do. Don't let anybody tell you what to do. Look for yourself. You have the same charts that I have, but learn, educate yourself about Bitcoin. What does it do? Why am I doing this? Why am I investing in Bitcoin? Why am I not investing in other companies or stocks? Why? Because you heard it directly from the Powell himself, from the Fed chair. He said himself, Bitcoin is digital gold. The chair of the Federal Reserve of Banking also told you that Bitcoin is like digital gold. Well, if you know that, you know that he's now accepting it. The guy that told you 4 years ago, don't do that, or I'm not investing, I wouldn't invest in it, or we're telling our banks not to invest in it. We're telling our banks not to be a part of it. We're telling banks to close your accounts because of it. Is now telling you that Bitcoin is digital gold? You already know what the answers of the banks were thinking. So if the banks are on your side, the ETFs are on your side, the JP Morgans, Goldman Sachs are on your side, and retail's on your side, who's against you? Nobody. You're just betting against yourself. So why bet against yourself in the wrong direction? Just keep adding. Now,
Yeah.
would I tell you to keep adding when the markets are fully invested? No, heck no. But we're still in the first or second inning of Bitcoin. I don't even think we're in the first inning, to be honest with you. We're just in the beginning of all of this, right? So when I see that, yes, I get it. But I heard the same arguments back at 19,000. I heard the same arguments at 65,000. I mean, people thought the world was ending when Ethereum hit 1,500. It's at over 4,000, right? It's not ending. It's
Yeah.
just the beginning, right? So you just have to scroll those charts out, raise up your time frame, and understand what you're investing in. Once you've done that, you don't look at your charts anymore. I'll show you charts all day long. I'll show you what every news article out there is. I have it. But if you're thinking about it from the perspective of your kids, your future, what you want to buy, a house, a new boat, you're going to get all of that stuff if you just stay squared away with Bitcoin.
Yeah, ultimately it comes to how much conviction do you have in this asset class, and that's something that seems to be bolstered within all of us once we take the time to do the research. I mean, the writing is clearly on the wall. We have our government saying we're making a strategic Bitcoin reserve, even if they're not coming out and saying they're buying it just yet. We have the evil empire itself, BlackRock, accumulating Bitcoin for IBIT like it's going out of style. With that being said, though, anyone who's been in this market or in any market knows you can't ever officially or truly time the market itself. And a lot of traders will say that Bitcoin never gives you the entry point that you'd want or hope for. Do you feel that waiting for a big dip is the play? Or does it usually mean you're going to miss the next move and you should just be dollar cost averaging along the way? What do you feel like is the most effective play?
You know, Hank, on my desk, I have a crystal ball. It still doesn't work. I can shine it up. I can put glass X. I can do all that Windex on it. It still doesn't work. So why try to make something that doesn't work? I've got a microscope over here to help me understand the minutiae of the markets. It doesn't work. You know what works? Dollar cost averaging. It's very simple. If you've got $1,000, $10,000, or $100,000, break it down and say, okay, this is what I have to invest in Bitcoin. This is what I'm willing to lose or whatever. Okay, and this is my time frame. My time frame's a year. My time frame's 10 years. Whatever it is, divide it out. So if a market goes up and you have $100 of Bitcoin, okay, you have more Bitcoin. If it goes down, buy another $100 of Bitcoin. Break it out into tens, hundreds, whatever it is you need to break it out. But dollar cost averaging has worked in Bitcoin since literally the inception of Bitcoin.
Yeah, absolutely. And when Bitcoin has a little dip, like we've seen in the last couple of days, are you still looking strictly at Bitcoin and accumulating more sats, or do you look at maybe some altcoins as potential bargains, or are they just landmines waiting to explode while you're looking out for a little bit higher of an alpha play in the short term?
Man, 100% question. I love that question. That's a very good one. In fact, I will tell you the one that I have been, that I also now am in accumulation phase is Solana. I'll pull it up, Solana. Hopefully you can see the chart here. I loved this dip on Solana. If you can see this chart right now, look, at over 200, I thought that was just nuts. Thank you. I took my profit there at 208. It went up a little higher. Okay, I felt like, okay, did I make a mistake? No, I didn't make a mistake because it came back down. It got down to about 185. Now, why was that a concern to me? Right here. You saw back here in July that those tops became bottoms here. So there they are. They started to melt them up a little bit, and I bought back in. Okay, it had a nice run, about a good 10% run. I took it off again, bought back again. I'm under at 180, I'm buying again. So I bought some more here. I'm holding it here because I think that there's a big gap in here. So I think maybe 195, 200, and if we can break that, we'll be back over 200 handle and right back to 204, 205. I like Solana. I like what it does. It's if you're looking at meme coins without buying meme coins, well, this is the gas that makes it happen, right? So Solana. So I do like Solana quite a bit. I think this is one that is also being accumulated. I'm gonna pull up a monthly chart. A good example of that right there, Hank. If you didn't like it at $5, $10, it went straight up. It's going again. I think it's gonna make another run here. You saw big runs back in the early days of 2021. That's what I'm saying. If you didn't like it there, great, and you sold out, or you didn't sell out, you're still in the profit. You're still buying back in here, back last year, the last couple of years. So I'm not too concerned about it. Just keep buying. You're fine. I'm not telling anybody to buy meme coins. I think I'm not a big fan of meme coins. I never have been. You just said it yourself. Is this a market where you time it? No. Is this a market where you try to pick out the winners and losers? Yeah, if you want to. It's a stock pickers market. It might as well be a crypto market picker market. But I don't like that. You can also look at Ethereum. I think you just asked about Ethereum as well. Same situation, right?
Yeah.
If you got really scared back at $2,000 back at the beginning of the year, early part of April and May, you were out. Guess what? You missed it. You missed this last run. And look, you can look at MACD, you can look at linear regression. It's giving you the same answer. But the truth of the matter is, if you're pulling this is a monthly chart, it's the same situation. Look at those bottoms right there. So you know right where to buy. If you say, I don't know where to buy, or I missed it again, you know where they are. So if you've got a little patience, it's always good. If you don't have patience, great. Just keep dollar cost averaging. You'll be fine.
Yeah, and Ethereum is an interesting one because in previous cycles, it seemed to move very much in tandem with Bitcoin. It reached its previous all-time high of 4,800 last cycle when Bitcoin reached 69K. We almost touched new all-time highs in just the last week until we saw about a nice little dip itself with Bitcoin kind of coming back as well. Do you feel like these two coins now are completely different stories? It used to feel like where Bitcoin went, Ethereum was sure to follow, but it seems like they're kind of running on two divergent paths right now. What are you seeing from Ethereum as opposed to how you had seen it go in tandem with Bitcoin maybe in previous cycles?
Well, I think a lot of it has to do, in this case, there is news around it, right? It's who's accumulating, right? Michael Saylor being the biggest accumulator right now of Bitcoin and saying, again, he's buying more Bitcoin, which looks like he's doing it today, right? But Tom Lee is really getting into the ETF side of the Ethereum, saying, look, if you're looking at crypto in general and you want to buy the gas station, you want to buy that, then great. Then you want to buy Bitcoin. If you want to buy the actual feeling of the gas going into the car, that's Ethereum, right? So there is a divergence a little bit going on, but the accumulation of it from the institution side is now happening a little bit faster now on the Ethereum side and Solana in a lot of ways. But you're not seeing a difference, right? If I cross references the difference between Bitcoin and Ethereum, it's not really showing that too much. Look, I get it that one day Ethereum is up and Bitcoin is down a little bit and vice versa the other way around, but it doesn't really matter to me. I'm not trying to trade it, or I'm not trying to time it. I'm not trying to accumulate it based on what Ethereum is doing or what Bitcoin is doing today. I'm just doing it based on when you look at pasts. Right. In the past, Bitcoin has a great cycle. You can tell you with what the halvening. You can go with the Bitcoin cycles of, Plan B and all the different things that you see out there. Right. None of those really matter to me. It's about accumulation, and I want to own them for the future. Why? Because we are already seeing the changes in real life, meaning how we use Bitcoin and how we use Ethereum. And you're seeing more and more companies using Solana and Ethereum, and they need more and more of it to be out there, right? Why is this a big deal? Well, I think a lot of it, people are concerned about how much are on the exchange, right? Are the whales dumping onto the exchange, or are they pulling it off into their own hard wallets? Again, I just don't care. As you said at the last show, we were on the whale games. Again, I don't care. I'm not waiting for it. I'm just saying, look, you know what? I like this area. I think I'm going to accumulate. Boom, I do it. So in this case, you can see we're not even with this pump here on over the 4,000 handle. This is a 3-hour chart. If you don't know, I think I said this on your show before. Number threes. Stick that in your head, because that's what Wall Street's looking at. You saw it here on the 3-hour chart. Back here on the 10th and the 11th, there was accumulation phase right here before the last run. Okay, so this sell-off happened in 1, 2, 3 threes. You can see it here, the accumulation phase. This was the tops. Now becomes your support. So in the support and resistance situation here, I think we're going to run back to 4,500, make another test at it, maybe 4,478. We'll test that and then go, if we break that, 4,664, and then off to the races. And then at 5,000, is that a good time to buy? Probably not, but it could be. Because why? Because you're in it now at 43. So that's why I'm saying, this is what you're talking about when I talk about accumulation, right? But if you liked it back at 3,900, you sure as heck liked it at 4,300 in the tops, and then you sold off. So you went from 4,300 down to around 4,200, and you were unhappy. But all of a sudden, it made a nice run. So did you get out? Okay, no, but you own more Ethereum. Great. Now, did you buy more to capitulate against that? Hopefully, yes. If you didn't, and I don't believe in hope and luck, hope now you got a good chance. So you talk about when it's strategy to buy. This is your strategy to buy, and I do like this time frame here.
And you talked about the support level for Ethereum, which brings me to talking about the support level for Bitcoin. We bounced back. We went all the way to, I think it was 114,700 or something. We saw it bounce back above 15. Do you think that 114 level is kind of the line in the sand to watch for BTC right now? Or if certain information doesn't go our way in the future, maybe the Fed doesn't come out with the rate cuts we're expecting, could we see Bitcoin tumble closer to that 100K psychological mark?
Yeah, it could tumble to about 112. As I said in the earlier part of the show, right? We got to find out where our tops were, our resistance in the past becomes our support. So we saw it here. This is a weekly chart. So you'll see the support here got all the way down to about 112.5. You saw here the support got into 112.6. We could test that 112.6 handle. If we do that, then yes, then your next level is 110.5, and as you just mentioned. Do I see that happening? No, but there are some technical indicators saying that there's a good chance it could happen here. MACD, you're seeing it here in the weekly charts. But if I pull up a daily chart, where I think a lot of people are, you're seeing that line that I just drew, right? There it is at the bottoms. And I think we tested it this morning and then right back up. You saw this nice little bounce. Why? Because there's the support in the past, right? And then there's the resistance that we didn't even get down to in the past. So I think right here, the resistance in the past, which was back only on September the 5th, July timeframe, now you see it happening again. So we're going to push right back up. I think we go back and test 120 very quickly. Probably just be a pump maybe sometime this week, especially if Jackson Hole comes out and says, okay, you know what? We do see that inflation is okay. We see the job numbers. We understand. If I told you that the whole Jackson Hole symposium is based around one thing this time around, it's jobs. And we know there's cracks in the market when it comes to jobs. AI has taken some of those jobs. We're seeing some problems with immigration, so that we know that there's an issue with it. So guess what? The Fed's going to back off, and they're going to say, you know what? Maybe it is time to start the cuts now in the interest rates, because we need to pump this a little bit, right? That means risk on. And Bitcoin and Ethereum and Solana and the coins, they are a risk on asset. They're not a risk off asset. They're a risk on asset. But they are risk on because we're building with it. We're creating with Ethereum and Solana. We're creating a new level of how we move around the world with finances. So with that being said, I think we're still in the beginning. If I pulled up a monthly chart of Bitcoin, this is what I see. There's nothing stopping it. That line's going all the way out. The last time we saw this in a monthly chart was back in June. At June, it was at 103. So here we go again. The last time we saw this was back in December in your monthly charts. Last time we saw this spinning top was back in January. So all those three times was just a pause moment. It wasn't like, oh my God, I've got to sell everything and go away. It was a pause moment, and we paused and we ran back up.
And big picture, heading into September, what's the one number on the chart that everyone should probably be watching between now and the Fed's September meeting? Is there a price that you think we should really be keeping an eye on that could be a big inflection point depending on how things go in the future?
Yeah, 112.5. I think 112.5 is the hot number. I think a lot of people are looking at that number. Why? Because that was the number as the resistance back in the end of May. 112.5. Look, there are a lot of buyers at 112.5. There are a lot of people that are looking to really kick in some serious cash. But I don't think Michael Saylor is saying, oh, look at 112.5 or look at it 115. He doesn't care. He's just buying because he knows one thing. It's going to a million, according to him, right? So what does it matter to him if he's buying at 112 or 105 or 100? He doesn't care. He's going to buy, accumulate all of it because he knows it's going to 10x his money. So he doesn't care. And I think that's what we have to watch, right? I don't think IBIT's the same way. These zero DTEs and derivatives that we're seeing and these short hands and weak hands that we've been talking about, okay, great. Have fun. Enjoy that trading because you're going to do okay sometimes and sometimes you're not. That's fine. But you know what? People look at me like, oh, my God, you bought at 75. Well, you know, you should be happy. I don't care where it goes. right? But I care about it now. I care about the future, right? I want to see the market push higher. And if I thought the market was done, if I thought the whole thing was going to end, why would I continue to be in the Bitcoin market? I wouldn't. I'd say, forget about it. I don't care.
Right.
No, I don't. Because I know we're going higher. And that's all in my mind that I think about right now. Oh, well, Bitcoin, Steve, big beat. You're just bullish, bullish, bullish. I am also a bear when it comes to being a bear. I know I need to be a bear, but this is not a bear time. There's bears not roaring today. It's still about the bull and the horns. We're still going higher.
Yeah, absolutely. And I'm glad you brought up Michael Saylor too, because this guy, I mean, he keeps buying Bitcoin like a man possessed. They announced the purchase of another 430 coins just this week. So it begs the question, do big players like Michael Saylor's strategy actually put a floor under Bitcoin, or is that just a nice headline for all us to read about the continued bullish momentum?
I'm going to take Michael Saylor at his words. He said, if Bitcoin goes to zero, I'll be buying a lot of it, right? He told you that, right? And you're not just hearing it from him now. And, Michael Saylor was the finger in the wind, right? Licking the finger, put it up, and he was testing that wind. He knew about this Bitcoin thing at a very young. He started with, MicroStrategy was never about crypto, right? He knew about it then. So he knew about it so much that he even changed the name of the company to Strategy, right? So when he did that, he understood what the future was like. Now I'm about to go on another show and talk about the strategy of Michael Saylor and explain why he's thinking this. He did a deep dive into Bitcoin and of itself. Look, Hank, I did the same thing. When I first was talked about Bitcoin, it was at 75 cents. And I gave every reason why Bitcoin was never going to be here. That's right, 75 cents. I gave every reason in the world why Bitcoin was going to fail. I mean, I can say the pizza guy again, right? That poor guy probably still hates life, right? The most expensive pizza in the world. But I understand that. And do I want to be that pizza guy when it's at 1 million? No, I don't, right? I think one of the things that people say all the time is if you just had one Bitcoin, you're going to be rich in the future. Right? Because why? There's only 21 million. And we talk about this all the time on this show. Why? Because not everybody can have one. If everybody had one Bitcoin, then the Bitcoin would be $100 million. It wouldn't even be one. And we continue to talk about Bitcoin in US dollars. Even I did today on the show. But when I'm overseas, they don't talk about Bitcoin in dollars. They talk about it in yen. They talk about it in euros and pounds. The arrogance of the United States to think, or Michael Saylor to think that it's a US-centric product, it is not. It's a worldwide product that people are accumulating, right? In Seoul, South Korea, it's illegal to gamble. You literally go to jail if you gamble. This is the way that they get to invest, right? So they don't care what the price is. They know which way it's going up, right? In Australia, they're doing the same thing. In Japan, they love it, right? It's the same thing in the LATAM areas. They're doing the same thing. They're accumulating. And so it's arrogant of us in the United States to think that we're going to be the ones that controls Bitcoin. Nobody controls it. It is literally on a blockchain. It's literally living in everybody's computer that has this. So when I talk about the blockchain and in general, you can't talk about the blockchain. We talk about how we actually use it, right? The layer ones and layer twos. We are using layer two on a whole different level than we ever did 10 years ago, in ways that we never even expected. Gaming on layer two. On level one, you want to have microtransactions. We're going to have Bitcoin Lightning lanes, right? This is much faster. So how we integrate Bitcoin and integrate these cryptos is getting a little bit different almost every day, and we're growing. We're not going backwards. We're growing the way that we actually use it. When I go to Europe and I go to Asian countries, I got to carry fistfuls of yen and I got to have pounds for the UK, and I've got to have yen when I go to Japan, and it gets boring. I want to bring my cell phone with me with my crypto, right? It makes it a lot easier and be able to transact. You couldn't do that 10 years ago. Now we can, and how that we interact. So when you talk about charts and we talk about the interaction of what we're doing, what does that mean? Is it going to be 116.5 in another year? No, it's probably going to be where Tom Lee says, 250,000. It's going to be where Michael Saylor says, 1 million. If these guys have buku bucks and able to buy these things, then why wait? Why waste your time trying to find out if it's 116 or 112 or 120 or whatever? Because we know where it's going, because they're telling us where it's going. Why? Because they do have the means to buy it, to send it there. So send it to the moon, to Mars. Let's go.
Yeah, and we're at a really interesting point in Bitcoin's journey right now, right? Like you said, it's an asset for the world. It's not just an American thing. For instance, the Japanese company that cosplays this strategy, Metaplanet, just stacked another 775 coins themselves.
Right.
Do you think the kind of corporate FOMO that we're seeing right now changes the game for retail investors at all? Or are we still in that weird arena right now where retail's feeling priced out and they're not even listening to what's going on the institutional side of things?
That's a great question because, look, I've said this from the get-go. Crypto's about one thing. There was one thing that's slowing down a lot of people in the retail sector, and that's education. There's a lot of us that are nerdy and we get it and we understand Bitcoin now, but the truth of the matter is it's education. We need to educate people. I hear the story all the time. I can't afford a Bitcoin. You don't have to buy one. It's just you can buy bits of it, Satoshis, right? Educate them first, right? Okay, get a Robinhood account, get a Kraken account, get a Coinbase account, start slow, understand what you're investing in, and as you do, accumulate. We talked about the accumulation phase already. But when I look at it from international, the FOMO, let's go back in time a bit. Let's go back to the dot-com era, right? In the dot-com era, at the very beginning of that, there were only a few websites. There was Microsoft, there was IBM. Apple wasn't really even a player back then, believe it or not. Amazon wasn't even a company then, right? When we look at that, we had companies that were just going crazy. If you put a dot-com in your name, the stock jumped 40, 50, 80, 100% just by doing that. You could literally take a dart and throw it at the wall of stocks and hit it, and as long as it had dot-com in it, you were going to make money, right? The same thing happened in the wild, wild west about 5 years ago in Bitcoin and crypto, right? You can just, it didn't matter what coin it was. You could pretty much buy it and make money. Okay, well, we are in the adult phase of Bitcoin, in the first inning of Bitcoin, but we're growing up. Why? Why do I say that? Because regulations are coming out. On the last show, we talked about regulations. Again, it's arrogant in the United States to think that we're going to lead. The whole world leads in crypto. Right? So I want to see us creating regulations that put the frames on it and said, look, okay, it's okay to invest. It's going to make everybody a lot happier, right? If you think about it at the beginning, when the Buttonwood Agreement was created in the 1780s, right, for the New York Stock Exchange, it was just a bunch of guys getting together in a corner in New York City saying, I want to trade stocks of my company, your company, you can invest in my company. We've grown up since then. And since then, it was done in quarters and halves and dollars, right? Over time, we put it into digital. And in digital, it went to where we are today, right? And most people don't know this, but not one stock is actually traded on the floor anymore. They're all done in computers in the back end of New Jersey, right? It grew up. We had to grow up. It had to grow by technology, and it had to grow up. So the speed of the technology happened over 300 years. Right, 1700s to now, right? What's the speed of technology now? It's faster than even Moore's law. So if that's the case, why would you wait to buy Bitcoin and crypto? Oh, well, because Michael Saylor now owns it all? Well, you want to keep him owning it all? Buy some. You want to keep JP Morgan and Goldman Sachs from owning it all? Buy some. You want to own some for your kids' futures and your kids' education? Buy some. Don't wait until there's none to be bought, right? If I told you right now, 94% of all Bitcoin's already been mined, and there are miners mining as fast as they can. They're selling some of their Bitcoin in order to buy bigger and better and faster machines, more hardware in order to speed it up, the mining. So it's not slowing down, it's speeding up. Why would I want to wait till it's $250,000? Why do I want to wait until it's now $1 million? Oh, it's too late now. Or I could have bought it right here on Hank's show for the blockchain report and bought it right here at 116.5. That's what I'm telling people.
Yeah, absolutely. And one of the things you mentioned is the speed upon which these things happen. And while a lot of these technological advancements you gotta like, we can trade whenever we want, anywhere we want in the world, I wonder if part of that is intimidating to retail markets, right? That people out there feel like there's no way they can compete against these big institutions that are just backed by billions and billions of dollars. But your platform, Quasar Markets, is setting out to kind of level that playing field for everybody. Could you tell us a little bit about what Quasar does to kind of put everybody on the same field so we actually have a chance against the big boys out there?
That's a great question. Thanks for asking about Quasar Markets. We're doing quite well here. It's very simple. It's the decentralization, just like crypto, of data. It's not fair that the big boys have all the data and have it in their hands. What if I could give you the same data that everybody else on Wall Street gets and put it in your hands? What if I can AI that? What if I can give you data that you have, but you can get data too, but you don't know how to use it. We want to educate you on how to use the data. Okay, you got the jobs numbers. What do I do with that? What does it mean? Okay, you've got the fixed income data. You know what the 10Q of a Microsoft is lately. How do I do it? What do I do with it? How do I use it? How do I implement it? Educate them. Put into AI. Create a whole symbiotic relationship with the machine so that you understand what the data is and be able to get the same data as institutions and do it in a way that doesn't cost you an arm and a leg. We got it right now for $15 the whole platform, right, Hank? That's ridiculous. Right now, a massive platform like this, $2,500 a month. I'm trying to get it so that everybody has that same playing advantage. When you talk about it from this perspective of a retailer themselves, right? 10 years ago, there wasn't an app on the phone where you just went in and I wanted to buy stock. You could do it on a few banks, which I did. If I go back another 5+ years on that, you had to make phone calls to your broker. That's 15, 20 years ago. That was not, that was not a long lifetime away. For some people it is now, right? But if you fast forward to today, how many Robinhoods are there? And E-Trades and Fidelities and Moomoos, all great companies doing wonderful things and moving the needle forward. But they're not giving the same data that we're going to give you, right? I want to give you the data. I want to give you the ability to trade on all those platforms in one place, on one ecosystem, to make it a whole lot easier, to put it all into one place. Why is that important? Why is that a big deal? So you don't have to have 25 screens. I just want to because people aren't living like that anymore. They're not living behind huge screens like we do. There's a few of us that do still, but people are living behind their mobile apps. What if I told you in the future you don't even need an app? If I told you right now, out of the 100 of apps you have on your phone, you're probably only using 5 or 6 of them. We took all of the apps that you have and shoved it into one app, into one machine without having to have an app. We also made it in a way that you can understand these charts just the way and have all the different things in the charts, all these technical indicators right in the chart, right in your one desktop or your one machine or your one phone, right? You want to hear what's going on in those earnings calls. We've got that too. You want to know what's happening in the news. You want Bloomberg level news. We got that too, right? So that's what I'm saying when I say democratizing, giving everybody better data. I've talked to several people. I have a dear friend of mine, Nerd Street Games. He talks about it in an easier way to understand. Growing up, when I was growing up as a kid, there were only 3 channels, ABC, CBS, and NBC. Those are the 3 channels. Today we have millions of channels. Well, which one do I watch, right? What YouTube channel do I turn into? I know one I'm going to, RoxomTV. But I'll tell you, when you look at that from that perspective, right? People today can handle more information. They're already ready. Children being born right now will not even know what the world's like without the internet or Web3 by the time they're 16, 17, 18, right? Kids that are now 18, 19 years old today didn't even know what the world was like before the internet. So they can handle, they're already absorbing more and more data at the speed of data that we didn't even understand data was going to come out at. Right? I mean, back when I was starting, it's 14.4 and 9600 baud. I mean, 28.8 was, oh my God, and 56K was beyond worlds. Today, you got to have fiber in your house or you don't know what you're doing, right? And that's happening very quickly. So the speed of data is coming in, the amount of data that we can consume happens, but how do you digest all this? Is it too much information? Is it overload? And we made Quasar markets for that very reason. So we can boil down all of that into an easier digestible situation. In our AI, we don't have one AI. If you're just using ChatGPT to get your answers, you're missing the point. We have over 18 AIs in our system and patented, right? Why? Because we know that the narrative has to be rewritten for you. We know that you need to be able to see it the way that you want to see it. If you have a PhD behind your name, you're not going to want to see it at a very low level, at a 5th grade level. But if you're a 5th grader and you want to see it at a 5th grade level and you want to see it at a high school level and learn faster, the machine will make it for you, right? It's learning about yourself, natural language processing, as well as large language modeling, as well as visioning prompting too. I think that's important, right? The visualizations of it, of the AIs. And that's why we won. And I appreciate you asking that, Hank.
Oh, for sure. Well, I mean, you literally have a product that is making it a better place for all of us retail traders out there to have an actual chance against these gigantic whales in the sea when we're all these little minnows trying to make our way. So I think it's an important thing that we bring up because the data tells the story. And right now, the data is telling us that we still have huge inflows into ETFs, but spot buying from retail has felt very quiet as of late. It makes me wonder, does retail even matter anymore going forward? Is the market just driven by institutions now, or is there going to be a place where we see retail hop back into this market once they start getting that information and start realizing what Bitcoin really is?
Yeah, that's a great question. I even hate the word retail because that whole philosophy is changing too, right? Institutions want to know what the retailers are doing. You don't think so? Ask Citadel. Why is Ken Griffin paying Robinhood all that money to understand the order flow, right? If you're on a platform that's free, you're the product, right? They're using your information, your data to understand what you're thinking. I love when people say, well, if you just want to know what's going on in the world, ask a retailer. I'd rather ask Ken Griffin because he's the one who's got all the data on it, right? I've said this in the past. Yeah. In the past, the difference of the haves and the have-nots has been based on money. How much money you have in the bank, in a regular old bank. How much do you have in investments? That's how we decepted. Just ask Elon Musk, right? Or Mark Zuckerberg or Jeff Bezos. In the future, it won't be that. In the future, it'll be how much data do you have? You'll be able to sell your own net worth. You'll be able to sell your own data in the future. We're looking at that now, right? Quantum computers will be able to give you a social score and all that. That's coming, unfortunately. But the retailers want to know what the institutions are doing because they're always asking, how much money is Michael Saylor putting into it? By the way, folks, Michael Saylor is an institution. People want to know what iBit is doing. iBit's an institution, right? It's not a reason. They're not retailers. They want to know what you're doing. And guess what? They're doing the old thing we call the floor, front running you, right? So why do you think that you can beat them? You can't. Yes, you can for 5 minutes. We saw that during COVID, right? Where stocks like AMC and GME ran hard and kept going up, and we crushed a few of those big firms, right? Institutions. But guess what? They won because they went right back down, right? As I always say, retailers can win a battle, but institutions always win the war down the road. Now, with that being said, retailers can win the war too if you have the data, if you have the knowledge. Right? On our platform, we talked about this not too long ago. I knew about Warren Buffett and the rumor of Warren Buffett buying UNH. I talked about it on Schwab Network, right? That this is going to happen. It did, right? How did I know that? Because I knew the data. It was on Quasar Markets, right? It was on the news. That was inside baseball that, listen, Ken Griffin knew too, was also setting himself around it, right? Was also what Jamie Dimon was building around it. UNH was building. You saw buyers stepping in. You saw heavy call buying before the news came out. It wasn't a rumor anymore when it came out. So that's what I'm saying about getting data before anybody else has. I'm not telling you to front run. I'm telling you to just absorb it, understand the markets around you. That's how it's going to make a better player. And Hank, when you talk about it from the retailer perspective, retailers become institutions very quickly, right? What do I mean by that? Yeah. Well, a lot of people are quitting their jobs to be a full-time trader. That's awesome. But understand, if you're going to quit your job, you better be able to pay your bills. You need to be able to protect yourself, right? If a downturn happens in the markets and you're the wrong side of it, ouch, got to go back to work. And nobody wants to go back to work in a job that was less than the one you had before. So as you build yourself up, invest, create those nest eggs, create that ability to go forward. So as we see that, the kids are not going to JP Morgan and Goldman Sachs and saying, Mommy, Daddy, please invest the way that you used to invest at A.G. Edwards and Edward D. Jones. They're saying, I want to do this myself. But they want to do it because they are accepting the knowledge faster. They're understanding the markets better than we did as we started this out. So when you're looking at that, the institutions are looking at what the retailers are looking at. They want to know, why did you buy AMC and GME? Why? Because it was the most heavily shorted stock on the markets. Why? Because the numbers did not add up. They had a terrible CEO, and now they got a great CEOs. So all of a sudden, that data, that news, those PRs that were coming out, they had a much better understanding of the markets. And now you've got a much smarter retailer than you had 5 years ago. And because of that knowledge, those kids become better, and those kids now become the institutions. Michael Saylor was, believe it or not, at one point was a retailer. Jeff Bezos was a retailer.
Yeah.
Mark Zuckerberg was a retailer. It wasn't until what? Until they got knowledge, until they started building machines that got knowledge. That's when they got rich. It wasn't because they were buying and selling zero DTEs. They bought it because they had data, because they understood the markets. That's how they got rich. They built platforms based on what they knew to build, right? And so guess what? The platforms in the future are going to be built on Ethereum, Solana, Bitcoin, layer 1s and layer 2s. So why not be a part of that and not against it?
Yeah, I mean, the game has changed in so many different ways, from the access to data itself to the accessibility. And the game has really changed for Bitcoin too. As a big narrative this cycle has been, this isn't like other cycles. We may not go through the normal halving cycles anymore, very much in part because of all this institutional money at play. But something you mentioned earlier that's super important is the amount of Bitcoin, or the percentage of Bitcoin that has already been mined. Right now, it's about 93, 94% of all Bitcoin has already been mined. So that makes me wonder, does that make dips like we saw in the last day or two here less scary because supply is so tight now? Or is that just kind of a long-term story and we don't really have the proof behind that yet to really say one way or the other?
What's interesting, I talk about this all the time, like when you look at it from the perspective of other minerals or oil or gold, and I told you that it's gone. There's no more oil in the world, or there's no more gold in the world, and we still need gold, and we still need oil, and we need still all. If I told you we need more lumber to build homes, we need more whatever the commodity is, nickel in this case, tin, tungsten, molybdenum, which is we need in TVs, right? Is gone. Which is happening, right? These things are going away, right? If you look at it from the oil perspective, the Gawar in Saudi Arabia is running out. If I told you we're running out of Bitcoin, would you go out, run out and buy it? You and I would, because we know where that's going, right? That's what I'm saying with education.
Yeah.
We got to educate them that, hey, 93.8% of all Bitcoin's been mined. These dips, 90% of it for me is literally derivatives and money flowing back into it. It's not all just miners dumping. It's profit taking on their profit. And guess what? When you sell your physical Bitcoin, and I say physical, you know what I mean? It's gone. Mm-hmm. Right? If you're going to buy it, you got to buy it back either cheaper or higher. We don't know, right? You don't know if it's going to go down or up. Okay. But guess who is buying it? IBIT, Michael Saylor, Tom Lee, the same people we've been talking about. They can't wait for you to dump yours on the market. Yeah. So, we always say this whole adage about not your keys, not your coins. Well, you know what? It's actually right. So you better have your own Bitcoin that you own, not just in the ETF. People buy Bitcoin and ETFs because it's safer to them. It makes them feel better. But you don't actually own it.
Right.
You don't actually own it. If I look at it from the markets of the oil, right? So oil is now priced in futures markets, right? We have futures. So if you're a jet company, or you're an airplane company, and you got to buy like United Airlines or American Airlines, and you're buying fuel for your jets, guess what? You're buying the futures contracts. So you're seeing a lot of more futures contracts being played. And guess what? Either have to roll them over at the end of the month, or you have to buy more, or you take what we call possession of it, right? Meaning that you take oil, you physically get those 100,000 barrels of oil. Where do you want them displayed, Mr. Orr? No, I don't want them. I want to get rid of them because I'm just playing the game here. That's what's happening here too, right? You're seeing a lot of people that are playing that too, and they're playing the ETF because it makes it, because I can put it in my 401k now. I can put it into my IRA. Great. But do you think grandma and grandpa and their IRAs are buying and selling Bitcoin every single day? Nope, they're accumulating. And when you have it in IBIT and these ETFs and these firms, those firms have to prove that they have it in their reserves. So it is coming off. But guess what? It's not in your account. It's in JP Morgan's and Goldman Sachs account. And they get to keep it in their account. And they may not want to sell it back to the exchange. They may say, okay, you might have sold it in your IRA or 401k or on your account, but we know what? We think it's going to go higher, so we're going to keep it. That's different. And they can play futures against that.
Right. There's such an interesting psychology behind this, and it all comes back to what we have spoken on this show many a times, and that's the education expert. I remember when COVID happened. What was the one weird thing everybody sprinted to buy? It was toilet paper. We thought during the end of the world, the most important thing we had to get was toilet paper. Meanwhile, we have over 93% or whatever of the entire supply of Bitcoin that will ever be available is already gone and owned by somebody else, yet we are not here with the urgency as a population, as a total, like they're ready to buy it. And that's where the education thing comes down to, because we talk about, like, for instance, Robert Kiyosaki. We know him of Rich Dad, Poor Dad fame. He's on record saying he thinks stocks are about to crash, it's about to get really messy, and Bitcoin is the people's money. It makes me wonder, if the stock market were to tank, Stephen, do you see Bitcoin going up, or does it get dragged down with the rest of the market, even though it's supposed to be that digital safe haven asset?
That's a great question. There's two sides to that. A lot of people look at Bitcoin as the digital gold, as a protection, right, against the rest of that portfolio that you have. The answer is yes and yes. Robert Kiyosaki is correct. Everybody I've talked to on Wall Street, I was just there, as you know, last week as well. Everybody's feeling very nervous up here in these markets, the equities markets. Yes, even I am. I've sold a lot of my longer-term portfolio off, about 10 to 20% off now. When you look at it from that perspective, I haven't sold a single bit of Bitcoin except for the bit that I'm trading. I'm not going to sell any of that, right? That's put in my storage. I can't touch it. That's what I love about it, right? But when the market goes up or down, the stock market goes up or down, I don't physically have those shares in my hands. It sits in Fidelity or Wells Fargo or whatever accounts at E-Trade you have, Robinhood accounts, whatever accounts that you have, it sits in their accounts, right? They're what they call a custodian for it. So in those custodian accounts, when you look at it from a Bitcoin perspective, let's say Coinbase or whatever, it's in their accounts, right? It's on their exchange unless you pull it off of the exchange. When I look at it from Robert Kiyosaki's position here, he owns quite a bit of it, right? And he's telling you that he thinks the markets are overheated. They are. I mean, if I told you Palantir right now, that PE ratio is well over 300 now. You can even say price to the stock itself. Whew, the PS ratio was outrageous. But in Bitcoin's perspective, the scarcity is now telling you there isn't a scarcity of stock. If a company wants to make more money, what do? They just go back to the well and sell more stock to you. They say, okay, I need more money in order to fund this, and this, so I'm going to dump on my own people that actually own the stock. And then people rush out to buy because they think it's cheaper. It's not cheaper. It's just because that there's more liquidity out there. There's no more liquidity here in Bitcoin. Yes, the people that own it can produce that liquidity and create that liquidity for the other people, but they have to sell it in order to make liquidity happen. And Michael Saylor told you he's not selling. He's diamond hands on top of diamond hands on top of tungsten hands. He's not selling. So if those guys aren't selling, why are you? Right? Why are the people out there selling? That's just silly to me, right? And the people that are selling, the buying, that is the 100Xers. It's the 50Xers. It's the derivatives off the derivatives. To be honest with you, I think if we did a hard-nosed deep dive into the derivatives around crypto, I don't think there's enough Bitcoin to supply the actual derivatives. Meaning those people who have bought long-term calls, those people who have bought calls against IBIT, I don't think there's enough crypto to actually cover that. Right now, there's not enough physical gold been mined. Now, maybe in the ground, but there's not enough physical gold to cover all the paper around it. There's not enough oil been produced outside of the ground to cover all the paper around oil. That's why the price is $61 a barrel. If it was, it'd be $500 a barrel. If we're running out of oil that fast. There's a producer on oil. There's a problem with the oil, right? Once you get the oil out of the ground, you still got to refine it into all the other things that make it. But that like gasoline or plastic or lipstick, all those things the things that oil make, right? Bitcoin is the producer of all the things that make the crypto actually work. The layer ones, the Bitcoin digital gold. So if you know that we're running out of it, if you know that the Robert Kiyosakis are buying it and the Michael Saylors are buying it, you know that the JP Morgans and the Goldman Sachs are buying it, you know that You know, I don't know how to say this, unfortunately, but when you look at the chairman of the Federal Reserve of the U.S. banks is saying it's digital gold. When you're seeing Jamie Dimon of J.P. Morgan go from "I hate it, I'll fire anybody who wants to buy it" to "Oh, we own it," the world has changed. So why are you going against the ocean, going in one direction? It's like swimming uphill, or as we say on Wall Street, it's like picking up nickels in front of a steamroller. No way in hell am I going to pick up nickels in front of a steamroller. My steamroller is going to be bigger and bigger and bigger, and I want to go forward. So how do I want to be positioned? It's accumulation. And that's just it.
And with all of these big institutions buying it and clearly not selling, right? That would seem to be indicative that they are very confident of the direction Bitcoin is heading. I mean, obviously we have Michael Saylor at Strategy. We have Kathy Wood over at ARK says Bitcoin could be like 900K by 2030. Max Kaiser says it could be upwards of 2 million by that time. But it begs the question for me, if we were to see Bitcoin rocket to $1 million in just the next couple of years, let's say 2030, would that actually be good news? Or is that a sign that the world we live in now is in complete and utter chaos and Bitcoin is the only thing people are saying is safe? So it's like, it's good for Bitcoin, but could it be bad for everyone else and everything else in the world?
Well, you said it yourself. The thing that everybody bought was COVID was toilet paper, and they knew the world was ending. So why not buy the thing that protects you in the future? Bitcoin. If you think the world's going to end tomorrow, Bitcoin. If you think that the world is good in the future, Bitcoin. If you think the world is okay, Bitcoin. There's no reason not to own it. I mean, I've had several people constantly ask me, Steve, what should I buy? What stock should I buy? And don't say Bitcoin. I know you like Bitcoin. Bitcoin? I don't know what to tell you, right? At that time, there was around 90,000 back then, right? And yes, it went to 124. They were all happy. They finally broke down and bought it. Oh, now it's at 115. Now it's at 116, 116.5. Guess what? They're not unhappy because they bought it at 90,000, right? And they still didn't know what to do. They weren't educated about it. Now they're educated. Now they're accumulating, right? As more and more people get educated about it, and as more and more people accumulate, the speed at which we're doing this is going to grow even faster. And the miners can't keep up. They're buying heavier and heavier machines. So if you want to buy the pickaxes and you want to buy the gold miners themselves, it's NVIDIA, right? You need NVIDIA machines in order to make this happen, the cards, right? The computer cards. The video cards. But if you really are thinking that the world's going to end tomorrow, then it won't matter about Bitcoin or toilet paper because we're all going to die because of an earthquake or a hurricane or a flooding or struck by lightning. There's a million ways to die. That doesn't scare me. You know what scares me is not being in part of the future. And the future is Bitcoin. That's what scares me. Of not having enough Bitcoin. That's what scares me. I don't want to, if you think the world's ending, and you think Bitcoin's the answer, why are you not buying it? Doesn't matter what you think the price is today. If you think the world's going to do better in the future, and you think we're going to turn our faces towards being able to buy and sell products on Bitcoin layer 1 and layer 2, buy Bitcoin. I mean, it's not that hard to understand. Now, am I just being a bull about Bitcoin? Am I just being one-sided? Damn right I am. But I am also a bear when it needs to be. Right, and I understand those markets. I know when it's a bear market. I know when it's crypto winter, but crypto winter is over. Crypto winters were based on other factors back in the day, where the whales owned everything and the volatility was low, and there was concerns around regulatory environment. There was concerns around whether or not institutions would accept it. I've given you every reason. All those things are gone. All the reasons that made crypto winter happen are not around anymore. They're gone. Regulations are coming out. You've got a crypto-friendly White House. You've got a crypto-friendly administrations around the world. And if the world's ending and you think Bitcoin is digital gold, that's a protection, a hedge. Great, it's a hedge. If you think that that you just want to put it in your IRA, now you can. You want to put it in your 401k, now you can. All those things are gone. All those barriers that made crypto winter happen are gone. So here we are. So why would I want to be the person picking up nickels in front of a steamroller? I'm not. I'm going to be riding the steamroller and making sure my steamroller is bigger and bigger and bigger.
So I guess it's safe to say, Stephen, for our average investor out there who might be watching the show, your one piece of advice for them to survive this most recent dip without losing their mind or their shirt is just keep buying, keep stacking sats, and secure your piece of our next financial future. Is that feel about right?
To the moon, Hank, to the moon.
To the moon, baby. All right, Steve. Well, I know you got to go. As always, thank you so much for joining us on the Blockchain Report. Your insight and expertise as one of the most seasoned traders out there is absolutely invaluable to us. And before we let you go, one more time, if people want more of your insights or if they want to learn how they can actually get the info and data needed to trade like one of the big boys, tell them where to go.
Quasarmarkets.com. I think you'll see a much different, better picture of the markets. You'll get that information, and you won't have to pay an arm and a leg. Quasarmarkets.com.
Amazing. And they can always follow you. Is it QM Big Beat on X? Is that right?
QM Big Beat. And I also have a new website, qmbigbeat.com as well, if you want to see me there too as well.
Amazing. Well, make sure you guys go check it out. And if with the way things are going, I think we might have to change your nickname to Big Bull pretty soon because I love your bullish predictions and energy, and I know our audience does as well too, Stephen. So as always, pleasure having you. We can't wait to have you back on the show real soon. Have a great week, my friend. Thanks for joining us.
Thanks, Hank.
Appreciate it. All right, we're going to take a quick break, but when we're back, more of today's top stories right here on the Blockchain Report. So sit tight. You won't want to miss it. We'll be right back. All right, it is 11:37 a.m. PST on this Monday morning. Bitcoin's back up to 116,600 right now, so it looks like we're moving in the right direction. And as always, want to give a big shout out and thanks to our main man, the Big Beat himself, Stephen Orr, for joining us on the show. He is one of the most animated and insightful guys in the biz, so we certainly appreciate when he takes time to share his wisdom with us. So thanks, Stephen. All right, let's get back to the news, gang, because Max Keiser is back at it, and he'll actually be on the show later this week, so make sure you tune in for that. And he's decided that $220,000 Bitcoin was too boring. His new prediction, $2.2 million per coin. Yeah, you heard that right. A 10x jump from his long-standing forecast, and Keiser isn't pulling numbers out of a hat. He's tying it directly to America's runaway interest payments. Now, over on X, he shared a chart showing how the U.S. interest expense has been increasing over the last decade and saying that they want to lower rates so they can ramp this to $5 trillion. Bitcoin, $2.2 million incoming and underway. Now, the U.S. government has already burned through $1 trillion in interest payments over the first 10 months of the fiscal calendar year of 2025. That's the highest level ever at this point in the year, and it's on track to finish above $1.2 trillion in annual interest expenses. Interest alone. $1 trillion in interest. Rack your head around that number. That is not deficit spending. That's just the interest tab. And the slope of the chart looks like a rocket launch. You can see it right there. Look at just like a rocket. Oh, I'm going this way. There we go. Now for Keiser, the math here is quite simple. The bigger the debt bill, the clearer the case for Bitcoin's fixed supply. He believes policymakers will eventually be forced to cut rates to allow for more borrowing. And when that happens, the money printer gets another workout. Bitcoin was literally built to survive that mess. Keiser's logic, every uptick in interest payments is another argument for Bitcoin as the escape hatch. So if the debt spiral keeps steepening, don't be shocked if the price ceiling gets equally absurd. 2.2 million sounds insane until you look at the government balance sheet. Then it just sounds like simple math. And technical analysts are once again trying to scare you out of your coins. After hitting 124K, Bitcoin has dropped about 8% and confirmed a breakdown from a rising wedge pattern that's been forming since back in April. For the uninitiated, rising wedges are supposed to be bearish reversal setups. Higher highs, higher lows, then boom, the floor falls out from underneath you. Analyst Captain Fabek points to support at 110 and 112,000. But if we lose that, we're looking at 105 to 108,000 levels of support. And in the worst case scenario, a trip down to the 98 to 100K psychological level. And if things get really spicy, the measured target of the wedge points to as low as 88K. So basically, yeah, nobody wants that. Get out of here, you bearish nonsense. So basically, if the wedge breaks, we're talking about a potential 20% correction. And if you like historical deja vu, some analysts are calling this a 2021 style double top. You see, back then, Bitcoin hit 69K twice before crashing all the way down to 16K. This time around, the double top could send Bitcoin toward 94,000 by September if sellers keep pressing. On-chain data isn't exactly helping either. Whale wallets, so we're talking holding more than 10,000 Bitcoin, are at their lowest level this year. Or in other words, even the big fish seem to be trimming some profits off the top. But before you go full doomsday on me here, remember one thing: the Fed might actually cut rates in September and beyond. Just a 25 basis point trim plus global money supply growth could easily blow past these technical tea leaves and send Bitcoin back to 132K or heck, even 170K. So yeah, charts say 88K, macro says 170K. Choose your fighter wisely. And institutions are still playing by the wrong rule book, or so it seems. According to Jeff Park of Bitwise Asset Management, big money keeps trying to force crypto into the private equity and venture capital box. And it doesn't fit. Traditionally, institutions worship the illiquidity premium, the idea that if you lock up your cash for a decade in VC or private credit, you'll get paid more for the patience. Now, David Swenson at Yale pioneered this with the endowment model, allocating 70% to alternatives. It worked for them. But Park says in crypto, that framework is totally backwards. In fact, he argues the term structure is inverted. You actually get paid more for liquid risk than for locking yourself in. Or in plain English, the juice is in the short term, not the long term. Park pointed to April 2024 as proof. Bitcoin dropped 7% that month, but market-making strategies annualized at 70% and arbitrage pulled in 40%. Try getting that in a 10-year VC lockup. Meanwhile, institutions keep piling into crypto venture funds, treating them like the new Silicon Valley lottery ticket. Park says that ignores where the real scalability is: the liquid markets. In May alone, $2.5 trillion traded in spot assets and another $2.5 trillion in Bitcoin futures. That's not some boutique VC round. That's global liquidity sloshing around 24/7. And instead of seeing volatility as a risk, Park says institutions should treat it as the alpha generator. If the S&P 500 had 70% volatility, private equity returns would look very different. In crypto, we just call that Tuesday. Bitwise is leaning into this thesis with multi-strategy products that hunt for liquid alpha across arbitrage, market making, and trend following. Park even quoted Swenson himself saying, "Maintaining an unconventional portfolio requires accepting idiosyncratic risk that looks imprudent to conventional wisdom." To which Park added, "Sounds like crypto to me." So while most institutions are chasing the illiquidity mirage, the next real iconoclast will be the one who embraces Bitcoin's volatility, uses it, and stops pretending this is just another asset class to lock away for 10 years. Because in crypto, waiting is the risk, acting is the alpha. All right, we're taking a quick break, but when we're back, more blockchain report, including some bullish, bearish, or BS. So we'll break down what today's events are meaning for Bitcoin and its price as we're going forward. You won't want to miss it. Stay tuned. We'll be right back.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back. It's time for a little blockchain without borders because, like my good friend Steven said, this stuff is happening in other parts of the world too, so we better let you know what's going on. Because right now, it looks like the U.S. lawmakers are finally deciding to take a page from the old crypto playbook. A delegation of U.S. legislators recently packed their bags and headed to Argentina to see how this Latin American country has embraced the world of digital assets. The group, led by French Hill, chairman of the U.S. House Financial Services Committee, also included Representatives Don Davis, Warren Davidson, Janelle Bynum, Troy Downing, and Tim Moore. Their goal? To get the lowdown on Argentina's rapidly expanding crypto market and how the country has managed to integrate digital assets into its financial ecosystem. You see, Argentina has found itself at the forefront of the crypto revolution in Latin America, driven by sky-high inflation and the relentless devaluation of its national currency. Faced with economic instability, many Argentinians have turned to cryptocurrencies like Bitcoin and stablecoins as a hedge against the country's financial turmoil. Now, during their visit, the lawmakers met with Argentine President Javier Milei and other key policymakers to discuss Argentina's approach to regulating digital assets. And according to local sources, the primary aim was to introduce the U.S. crypto policy frameworks, particularly the Genius and Clarity Acts, and see what Argentina's regulatory environment could teach the United States. One of the highlights of this visit is the fact that Argentina's crypto adoption model is largely grassroots driven. People aren't just trading crypto for speculative gains. Instead, they're using it to save their money and send remittances, real-world applications of crypto that go far beyond the hodl mentality. Now, Argentina's government is exploring ways to integrate this new financial model with the country's existing systems. And while the details on regulation remain unclear, the visit is a clear sign that Washington is starting to pay attention to how countries like Argentina are navigating the complex world of cryptocurrency. This visit shows that while the U.S. is still hashing out its own crypto policies, countries like Argentina are already putting in place frameworks that could be the key to real-world crypto adoption. So, while the U.S. debates, Argentina is out here building the future of finance, one Bitcoin at a time. All right, real quick, let's see what our robot overlords are up to in some AIO. Let's run the stinger, boys. All right, welcome back. Time for a little AIO. Let's see what our robot friends are up to now. Well, a group of American AI researchers went to China, and they came back with one message, and that message was, we're totally screwed. Rui Ma, a respected China tech analyst, toured the country's AI hubs and said the difference was night and day. In China, energy availability is considered a solved problem. In the US, it's considered a congressional debate. You see, Goldman Sachs already warned that AI's insatiable energy demand is smashing headfirst into a fragile US power grid. And researchers saw it firsthand. You see, in China, no one even worries about whether there's enough juice for data centers. In America, we're still hoping the lights stay on during a heat wave. Data centers are now such a massive part of the economy that spending on them is overtaking consumer spending share of GDP. McKinsey projects companies will plow $6.7 trillion into new centers between now and 2030. And Deloitte says the biggest choke point for the U.S. is simple. The grid just can't handle it. So bad, in fact, that companies are literally building their own private power plants just to keep servers running. Meanwhile, Ohio residents are already complaining about higher electricity bills, up $15 this summer thanks to data center demand. Goldman, well, they summed it up, saying AI's power demand is outpacing the grid's decade-long development cycles, which is banker speak for good luck keeping up. Now, compare that to China. They add more electricity demand every year than Germany consumes in total. Entire provinces are covered in rooftop solar. One province alone matched India's total power output. China deliberately overbuilt everything. We're talking generation, transmission, nuclear, renewables. Their grid runs at 80 to 100% reserve margin, which means they've basically got double the electricity they need sitting in their back pocket. In the US, we run with 15% margins on a good day. In California and Texas, officials issue red flag warnings if demand rises even slightly. In China, they treat data centers as a convenient sponge to soak up the oversupply. If renewables can't keep pace, they can still flip on and idle coal plants and bridge the gap. Not exactly ideal, but it works. In the US, New generation takes years of permitting fights and lawsuits before a single shovel even hits the dirt. And it's not just hardware either. In China, energy planning is coordinated by long-term technocratic policy. Infrastructure is built in anticipation of demand. In the US, infrastructure is built after 10 years of NIMBY battles and private investors demanding ROI in 5. David Fishman, a Chinese electricity expert, put it pretty bluntly, saying, they're set up to hit grand slams. The US, at best, can get on base. So what's the takeaway here? Well, without a massive shift in how America funds and builds energy infrastructure, China's head start will only widen, which is a problem because AI isn't slowing down anytime soon. And if Bitcoin miners thought regulators were cranky about energy use before, just wait until they're competing with ChatGPT 13 for a power outlet. Whew, gotta watch out for that one. All right, guys, I think it's that time of the day where we wrap up today's show with a little bullish, bearish, or BS. So let's run that stinger. All right, time for bullish, bearish, or BS, where we wrap up today's show and decide if today's top stories are looking good, bad, or just a bunch of BS for our beloved Bitcoin. Let's recap. So our first story, Bitcoin slipped back down to 115K after $500 million in liquidations because nothing says healthy bull market like $500 million in longs getting margin called into oblivion. Bitcoin flushed all the way down to 115 because apparently everyone thought 10x leverage was a good idea. Spoiler alert. It wasn't. I'm bearish on this. Short term, yeah, that's how I feel too. I'm getting attacked by a bear. Short term, this is ugly, right? Price dips, people start panicking, and we get a sea of liquidation emojis on X. But let's be real here. This is just Bitcoin shaking those clowns out before climbing even higher again. You heard Steven talk about it earlier. If you've been around longer than 5 minutes, you know this is a drill. Nothing to worry about, but it's bearish in the immediate sentiment because, it's just another rinse cycle in a bull market wash machine. So bearish to start, but again, long term, I think we'll be okay. Next up, Michael Saylor is back at it again, proving he'll never, ever have enough Bitcoin as Strategy, as they now call themselves, just spent another $51 million scooping up sats. That's couch cushion money compared to his previous billion-dollar binges, but the man is basically dollar cost averaging with corporate bonds at this point. And I, of course, am bullish on Michael Saylor and Strategy's buys. Every time Saylor buys, it's like a lighthouse in the storm. The guy will literally mortgage his soul to stack more Bitcoin, and we respect him for that. Love you, Michael. I mean, that kind of conviction reassures institutions and retail alike. So if Bitcoin dumps, just a reminder, there's a billionaire out there refreshing Coinbase with his credit card ready and waiting for you, and his name is Michael Saylor. So I am bullish on that. Last story, we got one bearish, one bullish. Let's see if we can even things out here on a high note. So a delegation of US tech and AI big brains just visited China's grid and came back looking like they toured the Death Star. They basically admitted that our infrastructure is a glorified dial-up modem compared to Beijing's gigacharged AI future. The subtext here, China is way better at building the giant, power-hungry toys that Bitcoin miners also need. Ooh, I want to say bearish on this, but I'm going to call it BS, and here's why. It's a fun geopolitical dunk, right? But it doesn't move Bitcoin's price today. Long term, sure, it definitely matters that China's energy dominance could tilt mining, but in the here and the now of it all, this is just more academic hand-wringing and an excuse to throw shade at American utilities. Again, interesting geopolitical theater, but it's not pumping or dumping your bags today. So I'm calling BS. So today's final score, we got one bearish, one bullish, and one BS, which means today's market mood is officially BS, all right? Not bullish, not bearish, just one giant shrug with Michael Saylor in the background screaming, buy the dip, while, degens everywhere cry over getting liquidated. It is what it is, but it's a BS day, and that's okay. We have those sometimes. As always, boys and girls, thank you so much for tuning into today's show. If you haven't already, please make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on every platform where people waste their time doom scrolling. And I will see all of you same time, different time, 8 a.m. tomorrow and through the rest of the week. Remember our new time, 10 a.m. PST on Mondays, 8 a.m. through the rest of the week, and I will see you all then, assuming I don't get liquidated first. We'll see how it plays. Thanks for tuning in. See you guys mañana.